Hello, everyone, and welcome to another episode of Founders Grid, sponsored by Gaber.io. Today we have Nasir. Nasir is the founder and managing partner at Zeal Capital Partners. Nasir, welcome to the show.
Mustafa, it's great to see you, and thank you so much for having me. It's a very important conversation.
So, prior to Zeal Capital Partners, can you briefly tell us what you've been up to?
Yeah, so I've spent the past 6, 7 years sourcing, investing, and helping scale early stage companies, primarily across the education, technology, employment technology, human capital management, people operations, and fintech as well. Across two funds, one being Village Capital, a I would say the most active early stage impact and global impact investment fund, focusing on 5 verticals. I was global head of their education technology practice and investments, and and then later led their U.S. economic opportunity portfolio, essentially just expanding my lens to not just education, workforce readiness, but also the fintech and the health sector. And shortly after, led AT&T's social investment fund, primarily focusing on backing early stage education entrepreneurs who were thinking, building solutions and products and services that focus on bridging our country's, the U.S. Skills gap between education and employment. And couple those two theses and areas of focus and a great deal of exposure, with entrepreneurs and the investing community, particularly here in the U.S., all across the country, not just very few places like New York or Silicon Valley or Boston, where most investment and attention happens, but recognizing that there are innovations and a great deal of capital that needs to be allocated to entrepreneurs who may not fit the traditional mold or may not live in your traditional tech ecosystem. And I, quite frankly, have concluded that's actually a better story when we proactively invest and support companies all across the country, not just very few places.
And that was the main motivation behind you for coming up with Zeal, and what other parts was there?
I think it was part of the motivation. I think recognizing the my for lack of better terms, reputation in the marketplace, right? The ability to look at my differentiated sourcing capabilities and relationships across the entrepreneurial and the investor community, but also recognizing other stakeholders who play a major factor in amplifying entrepreneurship and helping small businesses grow, like think tanks. I care deeply and to this day proactively lean on research, R&D, to help me think thoughtfully about policy implications and really understanding the end user, particularly the most vulnerable consumer and in families and communities where these products can have a strong impact. So it was understanding the an approach that was not being taken enough in the private markets venture capital community. And so for me, I felt strongly with conviction that a new, what I coin an inclusive investment vehicle is a new strategy mandate that levels the playing field for more entrepreneurs to get a fair swing at capital and also rethink post-investment value creation. So we coined that inclusive investing, by the way, which is trademark.
Oh, got it. Makes sense. Makes sense. So, keeping the conversation relevant to today's time,
Yeah.
COVID, and you starting Zeal in February, just prior to just start of COVID, right? So how's the journey been so far with you
Yeah.
in that regards? Just adding to it, uh, because if you remember the articles or the news coming out in around March 15th or March 30th, hey, VC money is going to run dry, investors are going to pull out their money, DLPs are rethinking, investment theses are being rethinking. Your own thought process, in March and in November? Is it the same? Has it changed? Has it evolved?
Yeah, that's a great question. The truth is, and I've shared this with a number of friends at the dinner table, well, family, because no one's really traveling, but you know, family and close friends, that Zeal, our strategy was a pre-COVID, pre-social unrest, pre-economic downturn, uh, and the strategy only once we got into the market, which was at the end of February, beginning of March, and obviously beginning to really start sharing the thesis, the mandate over the past 8, 9 months now, it's only heightened in terms of the two verticals that we're focusing on, and quite frankly, these are two verticals that have disproportionately impacted low wealth communities, particularly the Black and Hispanic community. And I thought, while no one could have forecasted this environment we're in now, it has sent a signal to limited partners and other investors who say, that's actually is a clear market opportunity when we think about rethinking credit assets expansion for low wealth individuals, rethinking FICO scores, rethinking resources for small businesses that allow them to, make sure they have the right uh, back office support and low cost benefits. And then you think about the future of work. So that's our fintech component. And on the future of work, the 40 million plus workers who are unemployed, the role that youth training and skill development programs play in alternative pathways to education. That's now those entrepreneurs who are building those businesses, their adoption rate has increased during this time. And the valuations on those companies are also quite low that fit our mandate, our how we think about allocating capital to entrepreneurs at the early stage. So, but aside from our strategy and our strategy being more of a more important than ever, it has been a whirlwind to see the number of institutions and foundations and individuals of wealth who are leaning in, recognizing that Black Lives Matter, that there is a clear racial systemic racism issue in our country, and has been for some time, and the role that the disparities that the Black community are up against, have historically been up against through structural racism, and then couple that with the role that entrepreneurs, Black businesses play to capture capture, to increase GDP growth, to increase job growth, and of course increase innovation. And so if this idea that just recognizing, as a Black investor, I'm unapologetic to say this, but recognizing Black genius and entrepreneurs. And I'm just excited to be a recipient of capital to rethink with my diverse lens, as someone who grew up in a low-income community in Atlanta, Georgia, who also is a graduate of an historically Black college university. I think that sends a powerful signal in terms of who deserves to manage capital and efforts to deploy to those who unfortunately have been left out based on today's numbers.
Which brings me to just adding on to the conversation, building on the conversation, which brings me to the next question in regards to, so I want to, the allocation of capital. So from a coastal point of view, okay, so primarily when it comes down to the VC landscape, the West Coast and San Francisco Bay Area, somewhat New York, they have an edge compared to other states when it comes down to capital disbursements, right? And even if you look at some uh, great VCs out of Bay Area, they've been tweeting for the last 3 years that if a startup is 1 hour away by drive from us, we don't invest in them. They've been like openly tweeting about, right? But due to COVID, do you think it's gonna the whole VC landscape is gonna see a shift in it, and especially for founders who are coming out of Utah, Salt Lake City, right, or DMV, or Austin, or even Latin America, Eastern Europe, South Asia? Do they have like more opportunities now?
Yeah, that's a great question. I think that we are currently seeing a more evenly distributed workforce, right? Where people choose to live. Essentially, people are packing their bags up and saying, look, you know, I'm moving from New York. I can obviously work from anywhere. I can work remotely anywhere in the country, anywhere in the world for some people. If you're fortunate enough, obviously there are those who are not, who are frontline workers, for example. But I think we're going to see more of our workforce and entrepreneurs, for that matter, feel that there's really not a lot of decisions will be made. Over Zoom, like you and I, right? And so that will definitely yield more opportunity for founders all across the country. But I think it is there's an advantage that we have at Zeal, for example, where we have strong relationships with these ecosystems in Columbus, Ohio, in Indianapolis, and Atlanta, in Des Moines, Iowa, Denver, here in Washington, D.C., et cetera. And I think there's going to be a number of VCs in New York and Silicon Valley playing a bit of catch up, really trying to uh, you know, lean in and build relationships with founders across these secondary markets. But it's I think my hope is that this is a meaningful shift that will increase where capital goes, because to your earlier point, data says, I think a recent Kaufman data report is that 80% of capital, I think 78% of capital goes to three places: Silicon Valley, New York, and Boston. 62% goes to those same three places globally. And you have the 47 other states, including DC, fighting over the remaining 20, almost 20%. I think that's wrong. I think that's again, to my earlier point, which why Zeal exists, is the better American story, the better story in terms of where and how and who we invest, is when we proactively lean in everywhere, not just very few places.
Sure. So which brings me down to my last question. I'm sorry we have time constraints. Otherwise, we used to do longer episodes prior to COVID, but my marketing team, they just cut off the podcast now. Which brings me down to future of work, since I realized that you're a big fan of future of work. And future of work debate has been going on for the last few years, with the WeWork being the biggest advocate of future of work. Then September 2019, when the WeWork saga or debacle started happening, everyone was kind of like rethinking it again. And then COVID happened, right? So now I look out New York, I'm sitting at one of the places of WeWork. So it's like 150 people floor, and I'm yet to see anyone for the last 3 weeks.
Yeah.
So
very common.
Exactly. So just going forward with all that commercial real estate, and being with the banks being the biggest real estate tenants, in majority cities, how do you think? So the question is, do you think the world will go back to normal, like the same routine once the vaccine and everything's out? If not, what's going to happen to all of this commercial real estate?
Yeah, so the real estate sector is going to, particularly the office space, is going to experience some downturns, right? I think investors may feel worried. There are other real estate sectors like the industrial space, maybe that will survive, but we're going to see companies not renewing their lease, right? You're going to see companies who are, say, we've after the past 8 months, we've been incredibly productive, and so in efforts to keep overhead low, let's work from home. Let's, either consider another way, and a more low cost way of syncing up in person once a week or twice a week. But the need to have an office space and pay so much money, you know, employers are rethinking that line item on their balance sheet, right? I think it also goes back to our workforce is more evenly, it will become more evenly distributed. You're going to see more, friends are taking gap years in New York, like college, friends are taking gap years. And so you're going to see more like, New York is not fun anymore. It's not the way it used to be, right? And so I'm going to go to Denver. I'm going to go to,
True.
Austin, Texas, or just rent a van, and we'll just be nomads for at least three months or so. And so that's the fact that it's cold. So many factors that's going to encourage people to leave the city. And so I think real estate is going to suffer. I think there are going to be possibly tailwinds at the industrial real estate spaces, given the role that frontline workers play, and factory workers, and that's a supply chain that's going to continue to thrive. But that. By the way, that's not what we focus on when we think about the future of work. We're talking about skills and ensuring and investing in skill focused technology that increases a worker or student's competency based skills, so he or she can remain competitive in today's and tomorrow's workforce.
Sure. Nasir, thank you so much for being on the show. I'm sure we could have talked more, but I'll definitely jump on a call with you after the podcast, just soon after. But for the recording, we have to cut it off for now.
Okay. Mustafa, this has been great. Thank you so much for having me, and this is an important conversation. I'm excited that we had it. Thank you.